Good morning, and thank you for joining me for the TerraCom Limited Investor Webinar. I'm Jane Morgan, Investor and Media Relations Manager, and today I am joined by Managing Director of TerraCom Limited, Danny McCarthy. Danny will be running through a brief investor presentation followed by a Q&A session. So to ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. Danny, I'll hand over to you.
Thanks, Jane. Appreciate the opportunity, and it's a pleasure to be here today. I'll just run through the brief presentation. Company at a glance, we have a portfolio of producing and development and exploration assets across geographic locations in Australia and South Africa. We have 3 current mines that are producing, one in Australia, which is our flagship Blair Athol, and 2 in South Africa, which both do a combination of domestic and export coal to the seaborne market. South Africa, largely due to the domestic market that we have with Eskom, is a stable fixed margin business, and 75% of our coal is sold domestically in South Africa on long duration, long-term value accretive contracts. Particularly our Blair Athol operation is cash generating, capitalising on strong demand for the low impurity, high quality thermal coal. And as I said, Blair Athol really does underpin our business as the bedrock of the group. On a combined basis, our markets are about 45% export to Japan, Korea, and India in long established markets, and our domestic sales are all in South Africa and represent about 55% of our total coal sales from a company point of view. Corporate snapshot, as of the 30th of January, our market cap was 148 million Australian dollars, the share price of 18.5 cents, and 801 million shares on issue, with the about 60% of our share base held fairly tightly by the people that you see on the screen. And on the map on the right-hand side, you can see that the locations that we export our coal to, as I outlined before, India, Japan, and Korea, from both South Africa into India, and also Australia to those locations. For the Q2 financial year 2025, the highlights were a fully franked dividend of 1 cent per ordinary share for the September 24 quarter, which was paid in December. We provided shareholders with an update on the cooperation agreement in relation to the Moorlands thermal coal project. And whilst the progress to date has been a little slower than we anticipated, we are making great inroads into that, and I'll go into that a little more throughout the presentation. We had closing cash at bank of 15.4 million and restricted cash of 61.3 million, which we all know is held in the rehab bond for Blair Athol. On that, initiatives are being explored and well advanced to enhance free cash flow generation via release of security deposits held with third parties, and we're continuing to work on that and should have some updates in the near future. From a Blair Athol point of view, these are the headline numbers. Blair Athol coal sales was 314,000 tonnes with ROM production of 558. And those of you who know the operation well will see some misclose there between ROM that we produced and the lower sales volumes. We are still on track as we sit here today for 1.8 million tonnes of coal sales from Blair Athol, which means that our second half of the year we need to come home with some wind in our sails. But right now, as I sit here, that remains our guidance for coal sales. The average coal price per sold tonne we saw increase slightly from the previous quarter, up to 162 Australian dollars as an average, and our FOB cash costs, excluding royalties, were down from the previous quarter at $113 per tonne. Those of you who watch the thermal coal index, you would have seen since December a fairly substantive drop in the forward projection. We do believe that there's some influences to that in and around milder winter, probably volume in the market. And right now we're sitting with a forecast average price per US dollar per tonne of 135 for the period January 25 to 27 December. And that came off fairly sharply in December. We've watched it consistently come down to stabilise now where it is, noting that the previous forecast that we put up based on information we had was circa $145 to $150 US per tonne. Our primary markets continue to be Japan, Korea, and India, with long-term term contracts on a combination of direct index-linked pricing and fixed pricing, which we are out on a competitive basis in the market. We have a strategy to push more production to Japan on a index link, and we continue with our strategies to implement that over the coming months. That's a bit of a wrap up there on around the grounds on the quarter and a bit of overview of the company, Jane.
Wonderful, Danny. I might get you to stop sharing your screen there, and we can jump into some questions. And again, please use the Q&A function, which can be found at the bottom of your Zoom screen there, to ask any questions. Let me kick off. So the result for the quarter fell short of expectation for Blair Athol. Can you give shareholders an overview of the total coal sales achieved and how TerraCom is placed to achieve the full year sales guidance of the 1.8 million tonnes?
Yeah, sure. Well, as we all know, it's the wet season in North Queensland, and whilst we plan for and prepare well for some rainfall throughout the quarter, we saw persistent long duration events throughout November and December in particular. Across those 2 months, we had over 250 millimetres of rain. And in fact, December rainfall was the most by a long shot of that same month in the corresponding previous 3 years. So it caught us somewhat off guard, noting that the forecasts coming into this season were for a relatively dry one, and we were on track for that with minimal rainfall during October, and then November we started to see a lot of rain, and I'll go into some more of that shortly. Despite the rainfall that we had, and due to the thorough preparation and excellent water management, our team at BA delivered solid ROM and processing volumes. And whilst ultimately the coal sales were adversely affected by the rain and the ship tonnes were lower than what we'd planned, at the end of the reporting period, we had an equivalent saleable coal stocks on the ground of 121,000 tonnes. And we sailed a ship which could have berthed prior to the 31st of December, but for a backlog of ship queues due to the rain, particularly in the back end of December. And we shipped 94,000 tonnes of our premium quality thermal coal on the 1st of January. And so if you count that into what we did, we're at about 420,000 tonnes. And so notwithstanding that we missed our previous expectation around 500, we did have a significant amount of rain that we just couldn't overcome. Regarding our full year target of 1.8 million tonnes for the year, the mine has the capacity. Our equipment is in good working order. In fact, we have a new Hitachi excavator to complement our fleet arriving at the mine, and we'll be digging in March. Our people are focused, and our mantra of consistent, reliable delivery rings true every day. The only unknown for us is the unpredictable weather events which are outside of our control. And if anyone's watching the horrific news of the past week in our region, and indeed to the north and the west of us, there's been serious rainfall events that's causing major flooding in coastal areas with high amounts of rainfall inland as a result of this, to the point where port operations at Dalrymple Bay have been impacted over the past week, with berthing operations ceased due to inclement weather.
Thank you, Danny. Bear with me. There's quite a few questions coming through, and this one's come through a few times just on Windtime Energy. So in August 2024, the company announced the cooperation agreement with Windtime Energy Group to jointly develop and operate the Moorlands project. Can you please provide shareholders with a little bit of an update on this?
Yeah, that's a good question, knowing that it would have been raised. So, whilst on the outside to others, it may appear that progress has been quite slow, I can assure you from inside the machine, since executing the cooperation agreement, TerraCom and Windtime have formed a joint steering committee. We've worked in cooperation to achieve a number of milestones, including the appointment of a dedicated project development manager that works in our office here in Brisbane. And that person is working across all facets of the mine, including mine design, infrastructure, and working with the tenements and approvals department to continue that work stream. We've progressed substantially the preparation and negotiation of definitive project documents with a focus on the development plans and the key commercial principles for the operation of the Moorlands project. And concurrently to that, we're progressing a very detailed functional description of the Blair Athol mine as it would operate as a infrastructure and processing precinct for Moorlands. So we aren't where we wanted to be, and that's evident by not having a definitive agreement. However, that doesn't impact our end goal of focusing on coal from Moorlands in 2026. So shareholders should rest assured that we haven't put the queue in the rack. I've been working at this for over 6 years personally. And so the time it's taking is to make sure that we do a thorough job and we extract the maximum amount of value for all parties as we progress this through.
Thank you, Danny. Again, lots coming through. So the resources market has seen its share of challenges and opportunities. How do you see TerraCom positioning itself in this evolving commodity landscape?
Well, being a thermal coal producer currently, Jane, we see the place of coal in the energy mix remaining robust in the short to medium term, and we continue to see demand for our long-term customers from Japan, South Korea, and India. There's significant investment from Asian countries to build new coal-fired power, and so Australia's high-quality, low-impurity thermal coal, will be required for decades to come. And for us, as we continue to leverage Blair Athol's longevity and bring in projects like Moorlands, we see it as a natural fit for us, and coal's here to stay. BA itself is BA coal is well known in the market for its low ash and low impurity qualities, and we have long-term repeat customers with our coal committed through to the end of March this year. Our sales mix is done based on a combination of direct nuke index and fixed price, and which enables us to take advantage of different pricing points and deliver a fairly stable and strong average pricing for our product. In the commodity game, though, through long-run price cycles, which there are many, and I've lived nearly 3 decades or almost 3 decades in mining, I've lived through a number of them. You simply must have an unrelenting focus on costs to survive. So it's very easy through the high times to put sticky costs into your business, but you must make sure that you remain focused on costs. And at TerraCom, one of our key strengths is being a low-cost producer. We have a drag line. We do everything in-house. We own or operator, and that means we're in control of most of the direct cost inputs to our business. We consistently look at our costs. We reported recently a move to owner-operated drilling, which we completed. We employ our own drillers. We own our own drill rig. And we have cost savings evident to the bottom line of that, and it's not a week goes past that we're not looking for other ways to shave a few dollars a ton off here and there. Whilst the revenue stream can fluctuate plus or minus $20 to $30 a ton, in comparison, we don't lose our edge, and staying sharp on costs is what it's all about.
Thank you, Danny. Again, bear with me. There's quite a few coming through. So next one, this one's come through a few times actually, just on the sale of the assets. Do you want to perhaps just provide an update there?
Yeah, we remain focused on, and a high priority for us is to divest our interests in our South African operations. And, we're working hard on that to deliver a result for the company and our shareholders, with a target of 30 June. But, that can only happen on a economic basis. I mean, we have made a significant investment in South Africa over many years. And, notwithstanding all of the issues that South Africa currently has with logistics and other matters, South Africa has contributed to TerraCom over the period, including through 2022 when we were paying off all of our debt and paying our dividends to our shareholders. And so, we have short or long memories depending on which are favourable to us. But, South Africa can only be divested at a point where it's economic for us and our shareholders. And, we're working hard with the current partners we have over there. They are motivated, as are we. We just need to find the right answer and conclude that transaction. Otherwise, we have to roll up the sleeves and make good what is a difficult situation in South Africa with the logistics constraints.
Actually, Danny, there's another question just here on the logistics. So the question is, it's always been a problem in South Africa. Are we seeing any sustained improvement?
I would have said we haven't gone backwards. I would say the overall state of the rail network in South Africa is the biggest legacy issue. The port has a capacity, Richards Bay Terminal has a capacity of 85 million, much the same as Dalrymple Bay here in Queensland. It is simply the amount of trains and the reliability of the train lines. There are a number of initiatives, like we don't lay down and sort of let it all work itself out. We're working with some other offtake partners that have access to port and rail and allocations. And so we're working hard on converting some of those, depending on what the trajectory of our divestment in South Africa is. So it remains a challenge. I can't walk away from that. And it's largely in the hands of the rail provider to, get their maintenance back on track and improve the logistics situation in the country. Everyone's at the mercy of Transnet.
Thank you, Danny. I'm jumping around a little bit here, but next question is, with all the rain in Queensland, has the port been impacted at all? And what are the shipping queues like there at the moment?
Yes, they have. The port operations have been interrupted, particularly over the last week. The unprecedented rain, in particular in some areas, if anyone's watching the news of what's happening up around those regional coastal townships. From last report, there are about 25 or 26 ships currently at anchor off Dalrymple Bay. Half of those have coal, half of those do not have coal. There's another 25 to 26 vessels arriving at Dalrymple Bay in the next 14 days. And so that will continue to put pressure on the rail networks from all producers. And it's not as though it just rains at Blair Athol and nowhere else and everyone's doing, going great. I would have to say that pound for pound, Blair Athol recovers from rain events in a very, very efficient manner. You can't put a big roof over a coal mine, Jane, and so whatever falls into a hole, and you have to either divert it away or pump it away. And so there's probably going to be some short-term challenges for producers with some port interruptions, but nothing that the industry hasn't experienced before.
Thank you, Danny. Again, this one's got two parts to it. So is there a ready market to sell? I'm imagining it's the South African asset for reasonable return. And then secondly, is the Moorlands project the main next project? Or would you consider other opportunities overseas or in Australia?
The South African divestment, there are potential purchases of our interest. The first and primary one is our current partner who owns 51% of the business. They are a black empowered company. They have aspirations to operate in their own right, and we're primarily working with them. However, if we exhaust that to no avail, we will continue to look at other opportunities which we have at our disposal under our shareholder arrangements. With Moorlands, we obviously have Moorlands as a major focus for our organisation, and whilst it's in its early development stages, it requires a lot of horsepower. However, we have the bandwidth, the space, and the intent to look at opportunities in bulk commodities that we are familiar with, that can be value accretive from the get-go, from acquisition or other means. There's a lot of activity around. We shouldn't sit here and close off our minds to that. We are focused, as I've said before, and I know shareholders will be listening, we are focused on preserving free cash flows from Blair Athol in particular to continue our dividend payout ratio. That is a known capital management framework for TerraCom, and I continue to state that. But we are open to opportunities. We get a number of things across our desk, Jane, and very soon the right one will come across that ticks all of our boxes, and we'll go after that with some rigour.
Thank you, Danny. Sorry, there's quite a few. Let me just quickly go through. All right. So how are approvals tracking for Moorlands, and what are the next steps there? And secondly, there's second part to the question, would it be reasonable to expect legal objections?
Approvals are tracking well. There are, and approvals are well advanced, in fact. We're waiting on probably the biggest tick in the box being federal environmental approvals. However, you've seen some recent activity around a change in focus. Dale Last, the Minister for Mines and Energy, declared late last year in November, Queensland's open for business. And so that's an amazing thing for an incumbent government to come and state. And so all stakeholders are motivated. The QRC, the industry bodies, are all motivated to make sure that the right projects are coming online at the right time, and Moorlands is no exception. Moorlands is a very, very integral project to not only our organisation in Wintime, but also to the ongoing longevity of the Clermont and regional communities around central Queensland.
Thank you, Danny. Look, we were almost getting close to the end of the webinar, but last question I think is, so as we enter 2025, what can the investment community expect from TerraCom?
Well, first up, we'll be putting out our half-yearly financial report due at the end of February. That will include further details of our operations and a number of things that are probably in people's minds, as well as our position on dividend for the reporting period. Noting, I can't speak too much about that at this time, but that's when we'll be channeling those results. In 2025, our focus can be split into three pillars, and that's been a long-standing focus for us of maximising value from Blair Athol. Every year I've joked that we report Blair Athol's got another 8 years, and we did almost the same when we reported its longevity last year, and that only comes about by doing further resource definition drilling, and keeping our costs in check, because if we can get every economic tonne extracted out of Blair Athol, the life of it continues. So our focus is on making sure that BA continues to deliver on a consistent and reliable basis, notwithstanding the ups and downs that we have with uncontrollable events, for its life over the next 8 years. And that really does underpin the TerraCom story. It's the bedrock. Realising value, two things there. One is the high priority divestment of South Africa. And as I said, that only makes sense on achieving appropriate economic returns. Anyone on this call can go and sell that business tomorrow. It's just about how economic it is. So that's a major focus. The other part for us is to unlock the restricted cash that we currently have held for security purposes. And we're looking at doing that in a responsible manner that unlocks the cash now, which realises a debt that we still have, that unlocks the free cash to, put into our capital management framework, which is allocated to a number of different areas, including potential returns to shareholders. But, it's early doors on that. We've been at that for a few months now, and hopefully we're able to bring something to the table in the current quarter. Otherwise, that's where we're at with that. And creating value for BA, it's all about making it a local processing precinct, primarily for the neighbouring Moorlands project and potentially other coal projects, within the region that can come and take advantage of the great infrastructure at Blair Athol. Our BD activities, Jane, are focused around opportunities that provide, as I said, immediate value and preserve the cash flow generated from the bedrock of our group, which is, Blair Athol. TerraCom essentially is Blair Athol right now.
Wonderful. Well, look, Danny, that's all we've got time for today. But if we have missed any of your questions, please feel free to reach out to us via the contact details, which are on the bottom of our ASX releases. And a copy of this recording will be available online in the coming days. But thank you all for joining us, and we look forward to hosting you next time.
Thanks, Jane. Thanks, everyone. Appreciate your time.